Hey everyone, welcome back to Corporate Decoder. Fubo just filed their 12-month earnings report and I'm seeing a major trend that changes everything about their future. Quick note, this is not financial advice, just my take on public filings for educational purposes. They reported a significant jump in revenue, but are still burning through cash at an alarming rate that investors need to see. Let's dive into the money side of things for Fubo, looking at their financials for the year ending the 31st of March 2026. We see a mixed bag. Their gross profit reached $46,281,4616, which sounds like a lot, but when you compare it to their total expenses, the picture gets a little less rosy. Overall, these funds are reporting strong performance. The Brandy's International Equity Fund saw its net asset value climb 28.28%. The Brandy's Global Equity Fund was up 22.86%. The Brandy's International Equity Fund, with Class A shares for example, had costs of $122 on a hypothetical $10,000 investment. That is about 1.07%, which is pretty much in line with what you expect for overseas stock funds. Their portfolio holdings are spread across many industries. Consumer staples makes up 21.42%. Healthcare is at 17.13%, and consumer discretionary is at 14.66%. Now, the Brandy's Global Equity Fund, Class A shares, had costs of $139 on that same $10,000 investment. That is a bit higher at 1.25%. The top sectors are quite different, with healthcare at 21.74%, financials at 18.27%, and technology at 13.89%. This shows a different strategy, focusing more on financial and tech sectors globally. Then we have the Brandy's Emerging Markets Value Fund, Class A shares. Their costs were $161 on $10,000, or 1.29%. This fund is heavily invested in technology at 25.78%, financials at 22.76%, and consumer discretionary at 12.54%. Emerging markets are known for higher growth potential, but also higher risk. And this allocation reflects that. They reported a massive 48.95% increase in net asset value for the Brandy's Emerging Markets Value Fund without sales charge. Moving on to the Brandy's International Small Cap Equity Fund, Class A shares. Costs were $147 on $10,000, about 1.28%. The sector breakdown is interesting, with industrials at 27.45%, consumer staples at 13.44%, and healthcare at 12.19%. Small cap investing can be very rewarding, but also very volatile. The Brandy's Small Cap Value Fund, Class A shares, had costs of $139 on $10,000, or 1.15%. Their top sectors are industrials at 32.70%, consumer staples at 14.89%, and technology at 12.25%. This fund had a standout year with a 42.46% increase in net asset value without sales charges. Finally, let's look at the fixed income side. The Brandy's Core Plus Fixed Income Fund, Class A shares, had costs of just $51 on $10,000, about 0.50%. This is much lower, as expected for a fixed income fund. Their asset allocation is very conservative, with US governments at 52.78% and corporate bonds at 31.53%. This fund aims for stability and income, and its performance reflects that, with a modest 3.72% increase in net asset value. Digging a bit deeper into the expenses, a key number to watch is the total advisory fees paid. For the Brandy's International Equity Fund, Global Equity Fund, Emerging Markets Value Fund, International Small Cap Equity Fund, Small Cap Value Fund, and Core Plus Fund, these were $14,168,009, $456,561. $8,352,747, $12,133,498, $1,731,487, and $82,493 respectively. These are significant figures that eat into investor returns. Now, the management's discussion of fund performance gives us the narrative behind these numbers. For the Brandy's International Equity Fund, Class A shares, they mentioned that holdings in South Korea, Mexico, Brazil, and France were big contributors, but allocations to Netherlands, Spain, and Hong Kong, as well as China, weighed them down. It is a global game of ups and downs. They highlighted Astellas Pharma in Japan and GSK in the UK as top performers in healthcare. Samsung Electronics in South Korea was a star in information technology, benefiting from AI infrastructure spending. On the flip side, its services and software companies like Capgemini in France and SAP in Germany were a drag. Concerns around AI disruption really hit these names. Also, beverages like Pernod Ricard in France and Diageo in the UK suffered from slowing global demand. And interestingly, They noted that their underweight to financials and overweight to consumer staples detracted from relative returns because financials did so well. The Brandy's Global Equity Fund also had its share of winners and losers. Holdings in South Korea, Taiwan, the United Kingdom, and the United States were strong. But China, Canada, and the Netherlands, along with their overweight to France, were a bit of a drag. In information technology, Taiwan Semiconductor Manufacturing Company, Micron Technology and Samsung Electronics did well, again driven by AI demand. However, its services companies bore the brunt of the AI disruption fears, hurting returns. Publicis Group in France and Comcast in the US were mentioned as detractors in communication services. The Brandy's Emerging Markets Value Fund had a really strong year, with class of shares seeing a 48.95% increase in net asset value without sales charge. Holdings in South Korea, Brazil, and Mexico were big contributors. And importantly, their underweights to India and China actually helped their relative returns because those markets didn't perform as well. NetEase in China was a bright spot in communication services, benefiting as regulatory concerns eased, but consumer discretionary holdings like Travelski Technology and consumer staples like China Resources Beer were detractors. They also noted a lack of exposure to metals and mining, which was a top performing industry. For the Brandy's International Small Cap Equity Fund, class of shares performed well, up 30.46% without sales charge. Consumer discretionary, communication services, industrials, and healthcare were standout performers. Geographically, France and emerging markets helped the fund. But information technology stocks and consumer staples detracted, along with that lack of exposure to metals and mining. OpenText and Globant were mentioned as detractors, pressured by AI disruption concerns. The Brandy's Small Cap Value Fund class of shares absolutely surged, up 42.46% without sales charge. Holdings in industrials, healthcare, and financials were key drivers, especially machinery and aerospace and defense. Kennametal was highlighted for raising its guidance and benefiting from tungsten prices. However, energy, information technology, and consumer staples were a drag. Netgear, OpenText, Amdocs, and Globant were specifically called out as detractors, again due to AI disruption worries. The Brandy's Core Plus Fixed Income Fund, class of shares, had a more modest gain of 3.72%. It actually underperformed its benchmark, the Bloomberg US Aggregate Bond Index, which returned 4.35%. Holdings in communications and pharmaceuticals were good, but banking and technology stocks modestly detracted. They were underweight in agency mortgage-backed securities, which might have been a missed opportunity as yields rose. And then there is the Brandy's Separately Managed Account Reserve Trust, SMARCS, which saw a 4.56% rise. This fund also outperformed its benchmark, the Bloomberg US Aggregate Bond Index. Its contributors were also communications and pharmaceuticals, while banking and technology detracted. This fund participated in a wrap fee program, meaning no direct expenses were charged to the fund itself. Looking at the financials, these Brandy's funds have attracted substantial assets, especially the International Equity Fund with over $2.5 billion in net assets. The smaller funds like the Global Equity Fund and Core Plus Fixed Income Fund have considerably less at around $83 million and $78 million respectively. This can impact their ability to diversify effectively and potentially their expense ratios over time. The reports also mention changes in how they calculate their fiscal year end, aligning it to the 31st of March from the 30th of September. This is just an administrative change, but it is good to note when you see reporting periods shift. A key takeaway from these management discussions is the recurring theme of AI disruption impacting the IT services and software sectors across multiple funds. This is a clear industry-wide headwind that investors should be aware of. On the flip side, the strength in semiconductors fueled by AI spending was a positive for companies like Samsung Electronics and Taiwan Semiconductor Manufacturing Company. The Brandy Small Cap Value Fund really stood out with its 42.46% return, showing the potential of that market segment when the right stocks are picked. But the fixed income funds, particularly the Core Plus Fixed Income Fund, slightly underperformed their benchmark, suggesting that even in a bond market, relative performance can be tricky. What is my take? The Brandy's funds, especially the equity ones, have shown solid performance, outperforming benchmarks in many cases. However, the heavy concentration in certain sectors and the recurring impact of external factors, like AI concerns, highlight the inherent risks in active management. For investors, understanding these sector bets and the manager's outlook on disruptive technologies is crucial. The fixed income funds, while conservative, remind us that even safer assets have performance variations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.